During the week, I purchased a new stock, and that stock is Taiwan Semiconductor Manufacturing Company, also known as TSMC. TSMC is the world's most valuable semiconductor company and the world's largest dedicated independent semiconductor foundry. TSMC's main clients include AMD, Apple, ARM, Broadcom, Marvell, MediaTek, and Nvidia, just to name a few. The key risk with TSMC at the moment is the risk of war between Taiwan and the People's Republic of China. And as the escalation increases, TSMC and its investors have explored options to mitigate the consequences of such an event. Since the beginning of 2020, the company has expanded its operations outside of Taiwan, opening up new fabrication shops in Japan and the United States, with further plans to expand into Germany. TSMC's 52-week low is $68, and the 52-week high is $145. Looking at the analyst consensus and price targets, the consensus is that it has a strong buy with a 75% buy rating and a 25% hold rating, with a 0% sell rating. The analyst price target for this stock is $266.50. That represents a 284% upside, and this is based on 4 ranked analysts. So the low estimate is $80, the average price target is $266.50, and the high estimate is $750. So it seems that there is a lot of promise in this stock. So I've bought a few of them, and that's the change to my portfolio. Let's take a quick snapshot of the past growth. When it comes to revenue, this amazing company made 1.9 trillion Taiwanese dollars in the last quarter. Here you can see how the revenue has been growing consistently. It did hit its first 1 trillion Taiwanese dollar in the third quarter of 2018. And since then, it has consistently ramped up what it's been earning, and now it's double that amount in 4 years. And you can see here the average growth for the company in terms of revenue. The average was 14%, and in the last 3 years it's been 23%, and in the last year it's been 29%. The same performance is applied to the operating income. You can see here how it has been consistently growing, and the average for the last 5 years has been 16%. In the last 3 years it's been 35%, and in the last year it's been 39%. And when you look at the net income, you can see here that the net income too is also growing at a phenomenal rate too. In the last 5 years, it made 17% average. In the last 3 years, it's been 34% average. And in the last year, it's been 38%. So this company is a company that has all the necessary performance indicators that says to me, I should buy this stock. And aside from that, it's a stock that analysts have rated as being undervalued by almost 25%. So this is a new addition to the portfolio. If you think there are any reasons why I shouldn't have bought this, please let me know in the comments below. When looking at the margins, you can see here that the gross margin for the last quarter it did its report was 55%. The operating margin was 45% and the net margin was 41%. When we look at return on capital, in the last quarter, the return on equity was 34%, return on assets was 20%, return on capital employed was 28%, return on invested capital was 30%. So let's look at the free cash flow position. In the last quarter, this company had 1.4 trillion in operating cash flow, and the operating cash flow has grown consistently over the last 5 years from an average of 20% to an average of 36% over the last 3 years to 63% in the last year. And in terms of its capital expenditures, that has also gone up, which tells me that the company is really investing in itself from 16% average over the last 5 years to 33% average over the last 3 years to 50% in the last year. And then looking at the free cash flow, we can see that it had 500 billion Taiwanese dollars, which is 495 billion Taiwanese dollars in the last quarter as free cash flow. And look at the growth rate. 5 years average was 27%, 3-year average was 43%, and then a phenomenal 93% in the last year. You can see the reason why this company really is an interesting company to me, and I'm hoping that I'll be able to invest a lot into this company and see significant returns for that investment. So if you disagree with my investing into this company, why not comment below and tell me the reason why you wouldn't have invested into this company. Now let's look how the portfolio performed in the last week. So that is the new addition to the portfolio, Taiwan Semiconductor Manufacturing. The average open was $73.57. It has since dropped 6.5% to about $68. For the month of September, the portfolio was down 6.31%, which is an improvement over the month of August, in which it was down 10.85%. So we'll see what October brings. The maximum risk score for October has dropped by 1 point and it's now 6. Looking at the portfolio dashboard, you can see now that there are 11 assets in this portfolio, the newest one being TSM. An additional $500 was added to this portfolio in the last week, although the overall performance of the portfolio is still flat. So the portfolio has moved from 35,500 to 36,100 approximately. The portfolio loss still remains the same as the week before. The total equity has increased to 28,500. The loss has reduced to 20.89%, and it beat the S&P 500 in the last week by 3.73%. So overall portfolio performance from previous week is up $155. So you can see between week 15 and week 16, the performance is actually flat, so there's hardly any change. In the last week, this portfolio outperformed the S&P 500 by 3.73%. In the last month, this portfolio outperformed the S&P 500 by 2.66%. And year to date, it has outperformed the S&P 500 by 27.90%. Please subscribe and like, and I'll see you in the next video.